Welcome back to Forex Focus with tastyfx. Today, we're going to be talking about how to trade a common technical analysis pattern called the double top trading pattern. We'll be talking about this pattern today because reversions are pretty common in the Forex market. So here's what they are and how to trade them. So the double top pattern is a bearish reversal chart pattern that appears after two uptrends. I like to think of this pattern as a set of mountains, just to simplify it a little bit. It features two peaks at similar price levels, and it's separated by a trough or a pullback. And it's a recognized tool for traders aiming to anticipate market reversals. There's also an inverse of this pattern called the double bottom trading pattern, but we'll get into that a little bit later. Here's how to spot this pattern. There are two distinct peaks that make up the double top. It begins with the first peak formation, retreats into a neckline, forms a second peak at around the same level, and then breaks below the neckline support level. Once it breaks below this support level, this suggests the potential for a sustained bearish trend. So here's how to trade this pattern if you were to potentially trade it. The first step is identifying a bullish trend. A double top pattern typically begins with a strong bullish trend, as you'll see with this sharp incline here. Then there's the first peak formation that makes up the first part of this pattern. It reaches a new high and then retreats down to a known support level called the neckline. So like I just mentioned the neckline to you all. Here's what's important about it. At this point, you're only monitoring the pattern. You haven't placed any, sold or bought or anything like that yet. So you're just watching, and the neckline serves as a hypothetical place for the trend to potentially break into bearish reversal. You're going to get into that second peak here where the price will rally again and reach a similar high to the first peak. Then there's the confirmation point. So like I mentioned in the neckline slide, the pattern is confirmed when the price retraces again and breaks below the neckline support level. So when you're trading the double top pattern, the optimal selling point occurs just below the neckline. And you might be wondering, why don't I trade a little bit earlier? Why didn't I trade closer to the 4 at that second peak? And the reason behind this is just purely risk management purposes. The neckline serves as just a hypothetical guide of, okay, this pattern's been trending downward for a while, so I think it could be a good time to sell. As for your stop loss and take profit, if you place a stop loss, a good place to put it is slightly above the second peak. This helps protect against any false breakouts and limits potential losses if the price were to reverse back up. Then you're going to measure the distance between the peaks and the neckline if you're looking to find the optimal take profit level. Once you measure this distance, subtract it from the neckline to set your initial take profit level. Now, the last and the most important step here is monitoring your trade. It's always important to not get greedy and to continuously monitor your trade and adjust your stop loss if you feel the need to. You also have the ability to trail your stop loss to follow the declining price, so you could capture as much profit as possible if this price were to continue on a bearish trend. Now for the inverse of this pattern, like I mentioned earlier, the double bottom. So this forms after a downward trend, and it has two troughs at similar price levels with a peak in the center. So instead of two mountains pointing up, imagine just one. This will signal a potential bullish reversal in contrast to the bearish reversal. And confirmation occurs when the price breaks above the neckline and it indicating an uptrend. Traders typically will enter this position, a long position, after this break. So here's a few key takeaways from today. The first part is the formation of this chart. The double top pattern includes two peaks at similar price levels and a trough in the center. For identification purposes, we like to look for the price breaking through the neckline. And then as for strategy, shorting or longing this position typically is based on trend reversal pattern. Thank you all.